Hey everybody, this is Tommy Lackey with PowerInvesting.com. Today is March 30th, 2024. I thought we'd do a triple play review and go down 5 time frames since everything lined up so well this quarter. So we're going to start here with the quarterly charts, as you can see on the screen right now. And these just have continued to climb. And if you look at the RSIs down at the bottom, you can see that while they are coming off a little bit and diverging as we go up, they have been above the 50 level for basically over a decade. Okay, IWM's the only one that really fell down below. And so from a quarterly standpoint, markets have been strong and they continue to stay that way. Now we're just going to smooth over some of these higher time frames since they're not as actionable. They're more for the back, kind of the back story for what we're trading against. However, as we get down to the lower time frames, we'll start to slow down and take a look at these charts a little closer. But see, even when you look here on these charts right on the monthly, when we drop down, you have very clean breakouts across the board. We did not get a new high breakout, but we have recently seen the IWM start to play along and jump in and work on it. Now its high breakout would be up here. Again, if you're not looking at the tail, which we go down to the daily, it'll be up there, but a monthly close over 223, 224 would definitely be a very strong follow through after these other two have already broke out to new highs. SPY and QQQ obviously being much more concentrating and led by the large caps, which is where we've been for years. Large caps have been the ones who have led this market higher. Now once we go from here and we drop on down to the weekly chart, now we start getting into seeing where the markets are right now. This is where we get a little more actionable depending on whether you're a position trader or a swing trader. And obviously day traders, you want to know where this is, but it's not really your what you're going to be following. So when we get here into this position, we see the SPY over here on the left, and I'll go ahead and expand this chart. Oops, I added a line I didn't want. All right, let me go ahead and expand this chart for us so we can take a look at it from a bear standpoint. And this SPY chart, as you can see where I've already drawn the line back here, has a clean breakout from that monthly chart. And on the weekly, it continues to climb up the right side here with RSI just now cresting this 80 level. Now it's definitely on nitrous, and I'm going to go ahead and reiterate, as I do to you often, is that when these are hit nitrous, where it did right here, oftentimes it accelerates. That would have put our price right about here, and we've seen a good rise even after it had already run strong. Again, a lot of times people feel like it's already ran too strong. That's why we use this nitrous signal, because oftentimes it can let us know, even if RSI is getting a little bit higher, it does not mean that the price is out of bounds yet. And then we move over from here and take a look at the QQQ chart on this weekly level. The QQQ chart as well has the same similar breakout. It's got a strong run, but it's been flattening out a little more lately, more than the SPY. And this is basically as technology and biotechnology has started to take a break while the rest of the markets have broadened out, and we've started to see much more strength, as we'll see when we get to small caps here in a minute. But again, this is a very strong bull range. It's been on nitrous since back here around this candle, and it's continued to move higher above this 9 SMA, as you can see. Even though it has slowed down some, it has certainly not broken down. So don't be thinking that large cap technology is out of play until they start seeing larger breakdowns in some of these big names. Again, it's broadening out. They may not be the leaders for a little while, but it doesn't mean they're necessarily going into any kind of a bear trend. And then we go over to IWM finally. Again, this has been our big laggard. It topped out a good while ago, back in November of 2021, and then basically it has been sideways since. It really hasn't participated in a lot of the upside that the large caps did, but even in the large cap indices, a lot of that upside has come from quite a few, maybe 20, 30 names. It's not 1 or 2 or 7 or any of that, but 20 or 30 names. But now we're really starting to see the markets broaden out, and this small cap move is proof of it. Again, it's in a weekly bull range. It's just not as extended as the other two, and looks like it's more likely to have some upside even if the large cap indices take a rest. So then from there, we can move down to our daily view. this is really what we tend to trade off more. And in this daily view, you can see that the markets on all levels are all in bull ranges and all in what I call my mushy trends. I have all these kind of zoomed in a little bit so we could take a look at where that is, but let's move back out a little bit here on the daily, and let's move back out to when this started in November. If I do that on all three charts, sorry I don't have them synced up, so we're just going to have to take a sec. But if I do that on all three of these charts, you can see that other than the IWM, the other two have been in strong trends, and the RSI, while getting overbought once and diverging quite a few times, has certainly not answered it in price. That's why price is always the final arbiter. The indicator helps guide you and helps give you an idea of what might happen or what to look for, but it's always price that's going to make our final decision. One thing I will say here is on the daily chart, the QQQ, this little failure swing, if it continues to move down next week, might be a little bit of a message that this is time to come back and check out around 434 and see if it can hold these MA bands again. If it can, fine, we'll go ahead and start working our way. But again, these mushy RSI trends oftentimes give you very nice moves and with little small grinding type action. SPY has definitely been the pinnacle of that kind of an idea recently, but it doesn't look nearly as ready to move its way down or break down as some of the large cap QQQ. So from there, we kind of move over here to our IWM or our small caps. And again, looking at this one in the daily, you can see this, even though it was a mushy trend, it all stayed under 60. It really wasn't the same level of strength that we saw in a couple of the others. However, in this last couple of weeks, we've seen this one start to work its way in breakouts. We had an initial one that looked like it was going to fail, but all it really did was come down into the MA bands. RSI came down to 50, turned around and moved its way back higher with nice volume down here on this recent move. Now Friday's candle with the tail says, okay, we might have a little more back and forth, but this breakout was a pretty nice clear message that the broadening of the market can stay for a little while and the IWM is maybe ready to play a little bit more catch up. So from the daily, we go to our last, and our last is going to be the 65-minute chart. 65-minute chart is one that we use for our intraday charts. Sorry, day traders, I don't go all the way down to 15 or 5-minute for you here in this video. But if you take a look at those yourself using this same setup, you're going to get basically the same messages, just faster. And so when we look at the 65-minute chart, we can see that all of them are still in RSI bull ranges. The SPY here, the QQQ, and then the IWM over here. IWM is the strongest in the short term from a momentum standpoint, which I think we all knew that as well. But as we go through and take a look at in the middle, we're going to stop at QQQ here. Drew another line I didn't need. And in that particular setup, you can see that this has kind of been pulling back in a flagging type action as it pulled off the highs on this RSI on 65-minute. Again, as long as it holds this bull range, we would expect it to break back higher and continue to move higher. But if it does break the bull range and stay under for more than a couple of candles, you can see back here, we do pierce it from time to time, but none of those have had the follow through and none of them have made it down to lower levels. So as long as we stay above and in this bull range, I would expect that we'll probably move back higher or continue to move sideways for a little while. So that takes us all the way from the quarterly charts all the way down to the 65-minute charts. Lets us take a look at each level, kind of what was going on, and gives us an idea of what we're going to move into the next quarter with. The biggest thing I can say here is every single one of these time frames is in an RSI bull range from the quarterly all the way down. That is not a bearish setup. We can certainly have pullbacks, but we take it one time frame at a time. And so the 65-minute goes first, then the daily, then the weekly. So we have a long time before we get into something that really rolls this market over. It can always happen, but right now that's not what we're seeing set up for. Let's see how the new quarter starts. Hope this helps and hope everybody had a great first quarter and good luck in second quarter. Have a great weekend and happy Easter.